Hey guys, welcome to another weekly update. There has been some large price movement for term deposits and mortgages. We've had a big announcement on the inflation front, and I've added a new segment to this video looking at the price of popular cryptocurrencies. If you haven't already, please make sure to subscribe to my channel down below to keep up to date with future updates. The largest news came out on Thursday when the Q1 CPI results were released. Banks expected the reading to come in somewhere between 6.9 and 7.2%, slightly below our peak annual inflation rate of 7.3%. The results came in much better than expected, down at 6.7%. This rate is of course still well ahead of the Reserve Bank's goal to keep it between 1 and 3% over the medium term. However, it is a good sign the hikes to OCR are taking effect. Tradables, or imported prices, had an increase year over year of 6.4%, while non-tradables, which are mainly driven by domestic factors, rose by a larger 6.8%, which is a record high. While the overall inflation picture is certainly looking brighter after this update, the fact non-tradable inflation exceeds the tradable shows there is a lot of work to be done domestically before the Reserve Bank feels comfortable that we have seen the worst of inflation and it's now behind us. Looking at the quarterly inflation numbers, they came to 1.2%, which was also below expectations, largely driven by a 3.7% increase in food prices and increases in housing, alcohol and tobacco prices. Transport costs were down, owing to lower petrol prices. Looking at other country announcements this week, Canada announced on Wednesday their annual inflation had dropped to just 4.3%. While the picture is looking better in North America, over in the United Kingdom it's a different story, also announcing on Wednesday their annual inflation remains above 10%. On Monday, we had some interesting data released by StatsNZ. As expected, food prices are indeed going up, and very fast. Versus March last year, food prices are up a whopping 12.1%. Contributing to this increase was grocery prices, up 14%, and fruit and vegetables, up 22%. This price appreciation is the highest seen in over 30 years. On Tuesday, we had the release of the Real Estate Institute of New Zealand housing data for March. It was reported that the median house price has fallen 12.9% over the past year, with larger falls of over 16% reported in Auckland and 20% in Wellington. The further south you go in New Zealand, generally the less impacted the housing market has been, with prices in Southland actually going up a little over 2%. It is also taking a median of 45 days to sell a property, up 9 days from a year ago. China released some promising economic numbers on Tuesday. Their economy grew by 4.5% in just the first quarter of this year, beating most analyst expectations of around 4%. Retail sales are up 10.6% year on year as well, showing Chinese consumers are outspending after their extended lockdowns. Industrial production is also up another 3.9%. Jumping over to the stock market, from Friday 14th to Thursday 20th, the New Zealand stock market declined slightly by 0.43%, with 81 stocks rising and 77 falling. The largest gainers include Task Group, formerly known as Plexure, which was up over 20% owing to their positive earnings release. Also rising this week were Marlborough Wine Estates, New Zealand Rural Land Company, SmartPay Holdings and Winton. Falling over 14% this week included Ascension Capital, Chatham Rock, Move Logistics, Greenfern Industries and Geneva Finance. Over in Australia, it has been a better result, with the ASX 200 index up 0.52% for the week, with 94 shares up and 88 down. Gainers for the week include EML Payments, PointsBet, Coden, Pilbara Minerals and the Independence Group. Losing stocks include St Barbara, Omni Bridgeway, Avita Medical, Polynovo and Helios. It has also been a really good week over in the United States, with all indexes appreciating for the week. The S&P 500 rose 0.8%, the Dow Jones Industrial Average rose 0.97%, and the tech-heavy Nasdaq Composite rose a decent 1.88%. Looking over in FinViz, most industries have had a great week. Tech is up, as are banks, insurers, medical, industrial and retail sectors. Areas not doing so well include drug manufacturers, communications, healthcare plans and oil and gas industries. Now looking over at crypto, the market has come down from its wild swing upwards in recent weeks. Bitcoin, Ethereum, Ripple and Cardano are all down between 4 and 8%. Now if we take a look at the term deposit side of things, there has been a lot of movement over the past week. ASB has increased their 1 and 2 year term rates by 20 and 10 points respectively. BNZ2 has increased their 1 year rate by 20 points, but decreased their 3 to 5 year rates by 10, 15 and 20 points respectively. Westpac has dropped their 2 and 3 year rates by 10 points. Kiwibank has increased their 1 year rate by 15 points, while their 2 year rate has dropped 5 points and their 3 to 5 year rates have all dropped by 25 points. SBS has increased their 1 year rate by 20 points and their 2 and 3 year rates by 10 points. TSB has increased their 1-year rate by 20 points, but dropped their 2 to 5 year rates between 20 and 25 points. The Cooperative Bank has increased their 1-year rate by 10 points. And finally, Bank of Baroda has increased their 1-year rate by 40 points. For yet another week, Rabobank and Heartland offer the best 1-year term deposit rate of 6%. For anything with a 2 to 5 year term, ICBC and China Construction Bank offer the best rate in the market of 5.45%. Mortgage rates are relatively more stable than those for term deposits this week. ASB has hiked their floating rate by 40 points, their 1-year rate by 15 points, and they've dropped their 3 and 4 year rates by 10 points and 5-year rate by 20 points. Heartland has increased their floating rate by 50 points. SBS have increased their floating rate by 50 points. Their 1-year term, including the one for first home buyers, by 20 points, while dropping their 3-year rate by 30 points and 4-year by 6 points. And finally, TSB have increased their floating rate by 44 points and their 1-year rate by 15 points. With Heartland finally hiking their floating rate, China Construction Bank now offers the best floating rate in market of 7.4%. Between 1 and 3 years, Heartland remains with the sharpest rates, from 5.95% to 6.14%. And for another week, Westpac have the best rates by at least 30 points for the 4 and 5 year terms. So that rounds out another weekly update. If you enjoyed it and want to keep up to date on everything financial, please make sure to subscribe to my channel down below. If there's anything you'd like me to add to these videos, please also let me know down below in the comments. Thanks for watching, and I look forward to catching you on the next one. Cheers.